Good afternoon and welcome to Deutsche Telekom's conference call. At our customer's request, this conference will be recorded and uploaded to the internet. May I now hand you over to Mr. Hannes Wittig.
Good afternoon to all of you and welcome to our fourth quarter and full year 2015 conference call. With me today are our CEO Tim Höttges and our CFO Thomas Dannenfeldt. Tim will first go through a few highlights of the year, followed by Thomas, who will talk about the latest financials. After this, as always, we have time for Q&A. Please pay attention to our usual disclaimer that you will find within the presentation. And now it's my pleasure to ask Tim to take you through his highlights of the year.
Yeah, thank you, Hannes. My highlight is already over. I was at the Mobile World Congress, but a warm welcome to everybody else here on the call. Let's start today's call with my 2015 highlights. 2015 was a year of double-digit momentum with investments, strong momentum with customers, and a strong momentum with earnings. At the beginning of the year, at our February Capital Markets Day, we have presented you our medium-term and strategic and financial targets. And we believe we strongly executed towards these targets in 2015, and we are very confident that we will keep delivering against them going forward. 2015 was a good year for Deutsche Telekom. The first slide is surely familiar to you by now and shows our main strategic building blocks, which include our focus on the integrated IP networks, our commitment to create the best customer experience, and our ambitions to lead in business and to work with partners where it makes sense. And maybe you have seen at the Barcelona fair, we have, after our partnerships in the Valley, our great partnerships in Israel, we have now even a leg in Asia. We have announced a partnership with SK Telekom, I think one of the most innovative operators in the world. And by the way, we are already launching products of these guys in the second quarter here in Germany, the Pico Beamer, just to let you know here. Slide 5 summarizes some of the highlights. We saw a strong and growing demand for our fiber and the converged offerings in Germany, in all of our integrated European operations. In the US, we added over 8 million customers for the second year in a row. 2015 was also a year of record investments in network transformation and spectrum. In the US, we invested to support strong growth in subscribers and usage, while here in Europe, we invested in our fiber footprint, in LTE, and in our industry-leading pan-European network transformation. By the way, in Barcelona, we announced as well that we have now operationally started the pan-IP, opening up the first data center for our European network in Budapest. We also made a number of interesting portfolio moves, but I will talk about that a bit later. Key focus for us is innovation. You need innovation for future growth, and my marketing belief is never lose the high end. So we need something new for our customers every day, especially in this dynamic environment of digitalization. The main area in this regard is our seamless connectivity, where we want to provide all access to data everywhere, ubiquitous for the customers. Our network transformation will give us a fantastic platform to improve our customer experience. We have presented that most of, let's say, especially in the fixed line area of the processes will be automated over the future. I'd like to highlight another example. We are very excited about the growth in the cloud area. And the new platform which we have created throughout 2015. Our financial results have been very strong with double-digit growth in all major metrics. This is good news and a real win-win. Strong EBITDA growth allows us to accelerate our investments while we grow our cash flows and our dividend at the same time. Based on our strong momentum, I'm happy to reiterate our medium-term financial targets for the group as we have laid them out of last year's Capital Market Day. Page 6 shows some examples of the strong momentum we are seeing with our customers. After little more than 1 year, we recently announced the milestone of 2 million Magenta 1 subscriptions in Germany. And after only a few months, we had almost 1 million Magenta 1 customers in Europe. In Germany, we added almost 2 million fiber customers within 12 months. And in the cloud, we achieved 30% revenue growth, even ahead of the launch of some exciting new partnerships and propositions which go live in 2016. Page 7 shows the strong progress we have made with some of our big network projects during the year. Again, these are only just a few examples. It took us 3 press conferences in Barcelona to announce all the innovations Deutsche Telekom presented. So we have a lot to say on this innovation piece. In Germany, in our integrated European operations, we have increased our fiber footprint by 24% or by 5 million homes. We have now passed 55% of German homes with fiber. You know our stated ambition to pass 80% of homes at the end of 2018, but the new broadband subsidy schemes revealed by the German public authorities late last year will allow us to reach even higher coverage levels, while earning a fair return on investment is possible. 40% of our German households are already on All-IP, and we have fully completed the IP migration in 2 more European countries, Montenegro and Croatia. All-IP lays the basis for substantial improvements in the customer experience, for instance HD voice, or much faster provisioning when you subscribe to our try-out new services. In the US, you know the numbers, we have extended our LTE network almost nationwide, covering more than 300 million people at year end. Our network remains the fastest LTE network in the US for the 8th quarter in the row. We now cover almost 200 million people with A-block spectrum. Just to reiterate that. 200 million people with A-block. A-block is low-band spectrum. And as we announced with last week's T-Mobile's results, we have acquired A-block spectrum covering a further 14 million people. So before we go into the auction, with the transactions on the A-block, we will reach already 258 million POPs, or around 80% of the population with low-band spectrum we have already acquired. This will further improve our customer experience and will allow us to enter many new regional markets. Coming back to Europe, in Hungary, our LTE coverage has now reached 97% and in Greece 82%. In Germany, we comfortably won all major mobile network tests, and the perception of German customers is very, very positive. Slide 8 shows the investment momentum. 2015 was a year of heavy investments to support the network improvements. Even adjusted for the strong dollar, our capex grew by 7% to 10.8 billion. We spent almost 4 billion on spectrum in 2015, mainly in the US and in Germany, where we were also able to acquire 100 megahertz of high-quality spectrum. Of course, the US spectrum auction is a big agenda point for us in 2016, but as we are now in the quiet period, I cannot say much on this subject today. For 2016, we expect a further small increase in investments, mainly to extend our German broadband rollout as part of the public subsidy scheme, but also to rapidly deploy the additional spectrum we acquired in 2015, especially in Germany and in Poland. To support our strong investments, we continue our efficiency drive. While we accelerate our network transformation, we nevertheless were able to reduce indirect costs by 0.4 billion outside the US. This is broadly on track for our medium-term guidance. This reduction was achieved through multiple measures, including increases in IT efficiency and reductions in overhead costs. Our headcount outside of the US declined by 4% last year. Moving on to slide 11. Innovation is very important for us. I have just come back from Barcelona, where we presented some fascinating technologies. The speed of innovation in our industry is just breathtaking, and we are at the very forefront of it. I'm showing a few highlights, but there are, of course, many more things I could talk about. For instance, latency in mobile networks as low as 1 millisecond. This is groundbreaking and will enable new applications in the future for robotics, for health, for autonomous driving. We have shown in Barcelona that it works, and we're the only carrier who could provide an end-to-end solution on this one already today. Bandwidth of 70 gigabit per second, 70 gigabit over wireless. That is more than 60 times faster than the current fastest mobile connection. DT just set the world record prior to the Barcelona fair. Network slicing, a pioneering concept which will enable new services and business model and is set to be fully implemented in the 5G standard. Cloud LAN, one of the first services produced with our PANnet infrastructure, which provides massive simplification for business customers. Just ahead of Barcelona 3 weeks ago, we achieved 11 gigabit per second peak speeds over copper. While this was in the lab, this success nevertheless shows the potential for further significant and capital-efficient speed increases for our customers. Our passion is to give our customers best-in-class seamless connectivity. You know our hybrid router, which combines fixed and mobile networks and which has been very popular in the German market, has been sold more than 300,000 times. Our new Magenta tariffs, they will include free Europe-wide roaming, including Switzerland, and Wi-Fi connectivity for free for 1 million hotspots, which we are enabling, removing both national and technological borders. As you know, we have an exclusive partnership with Immersat to bring seamless LTE connectivity to European air travelers. And in the US, our innovative binge-on mobile video product has been a big hit with customers. I have already mentioned our strong growth in the cloud last year, but the best is yet to come. In 2015, we agreed some unique partnerships, including our German data trustee agreement with Microsoft or our open cloud agreement with Huawei. These agreements will be an integrated part of what we believe is a highly differentiated and competitive offers, especially for the European customers. I could move on and continue because it's a really long list. And there was even an announcement with will.i.am, which was quite exciting emotionally. But I hope you got the idea that our business is driven by strong technical competence and innovations these days. When it comes to our portfolio, there were no major new deals in the fourth quarter. Throughout the year, in a number of deals, we have followed a prudent capital allocation process in line with our stated M&A policy. And we are happy with our main transactions, be it our sale of T-Online to Ströer or the acquisition of the government stake in Slovak Telekom at very attractive multiples. Our big deal was, of course, our exchange of our 50% stake in EE into a 12% shareholding of BT Group, the leading converged player in the UK. We are happy shareholders in this excellent company, and we believe in significant synergies from the EE merger. Going forward, we see multiple opportunities for mutually beneficial collaborations, for instance in purchasing, technology, or in our international operations, mainly in the B2B area. Moving on to our group financials. We are very happy with our 2015 performance. You could imagine that. There is another carrier who has double-digit growth on all KPIs. And we are very pleased to propose a dividend of 55 cents, representing a 10% growth to the previous year. Our headline revenue grew over 10%. Despite our high investments, we were able to achieve 10% cash flow growth, driven by 13% EBITDA growth. Even adjusted for the strong US dollar, our EBITDA growth was very strong at 8%. Our earnings per share grew to 90 cents, comfortably covering our proposed dividend. Our financial metrics were either in line or ahead, sometimes strongly ahead, of the run rates we committed at last year's Capital Market Day. Also, as my last chart shows, we performed well against our stated targets for 2015. Our revenues grew faster, and our adjusted EBITDA was ahead of our like-for-like guidance, even adjusted for various non-cash items in the US and last year's major settlement. Our free cash flow at 4.5 billion was 0.2 billion higher than what we had guided. Finally, looking at our guidance for 2016, we expect another year of strong revenue growth at the upper end or higher compared to our medium-term guidance range. We see our adjusted EBITDA at 21.2 billion in 2016. This assumes a net impact of handset leasing and data stash of around $700 million. You have heard the guidance given our US team last week. To be clear, our group guidance is consistent with our US guidance, and it implies a stable like-for-like EBITDA performance for our ex-US business in 2016. With this, I want to hand over to Thomas, who will provide you with more details regarding our fourth quarter performance.
Yeah, thanks, Tim, and hello everybody on the call. Let me start with the financial highlights. My first slide shows the financial highlights for the group as a whole, and as you can see, and Tim mentioned that already several times, but it's good to reiterate, our financial momentum remained very strong in the fourth quarter. Our strong EBITDA performance largely explains our strong year-on-year growth in our adjusted earnings per share. So that picture is extremely positive. Now let's have a more detailed look at the segments. Moving to Germany. In Germany, our Q4 revenues were down by 1%. It was slightly up for the year as a whole due to the higher handset sales. The 4% EBITDA growth we achieved in the fourth quarter mainly represent cost phasing and should not be extrapolated. But obviously we are very pleased with that. Despite significantly higher investments in our network transformation, we were able to deliver stable EBITDA for our German business in 2015. Our Q4 subscriber and mobile service revenue trends remain healthy, and they are quite consistent with those reported in the previous quarters. We gained 362,000 contract customers, and the sequential decline in our own branded net adds is fully explained by a large business customer loss that we already talked about the last quarter, and the bigger chunk of that is now in Q4. Mobile service revenues were down by the same 0.4% as in the previous quarter. The next slide shows the impact of our convergence accounting on reported mobile service revenues. I think you got used to that format already. And as you can see, our underlying Q4 trend again was very similar to the previous quarters. As Tim has mentioned, we ended the year with almost 2 million Magenta 1 customers in Germany, which is well ahead of our initial expectations. The resulting convergence drag is a little bit bigger than expected at this stage, but of course we are very happy with that. It is really a great success, and we reiterate our Capital Market Day target for the mobile service revenues being plus 1% in the CAGR, midterm CAGR. On the fixed line side, in the fixed line market, we added 48,000 broadband customers. While this was a bit slower than the previous quarters, for the year as a whole, we of course substantially exceeded our initial guidance of 100,000 net additions. And as you know, we removed a number of promotions in the recent months, while other players remained aggressive in the marketplace. Positively, we had the strongest growth in fiber ever, with over 500,000 German homes subscribing to this quarter alone. As in the previous quarters, the majority of these customers were on our retail platform. Line losses ticked a bit sequentially, but the trend remains positive. Our broadband revenues continued to improve, and we saw a 1.3% growth in the fourth quarter, up from 0 at the beginning of the year. And I remember well the meetings and discussions I had at the beginning of the year with some of you. Looking into your faces was quite a lot of question marks whether you really should be convinced. And as you see, we're moving the needle here towards the 2% CAGR we want to achieve in the midterm perspective. Looking at what we call our total German revenues, fixed and mobile, Q4 was down 1.1% in the fourth quarter. The one-off in wholesale that we flagged in the third quarter fully explains the slight sequential deterioration. However, the picture is that we see ourselves well on track for the medium-term revenue targets that we presented at the Capital Market Days, being at the 1% on the mobile service revenues, the stabilization wholesale revenues, and the 2% on the broadband revenues. And Tim has already talked about the progress we are making in our network investments. We added more than 4 million German households to our fiber footprint and now cover 55%. 40% of access lines are on our IP platform, and we have reached 90% of LTE coverage. So, turning to the US. Let me now quickly present some of the highlights of our US performance. T-Mobile has already presented very strong numbers last week, and despite much higher than expected subscriber growth, like-for-like EBITDA came out in the upper half of the initial guidance range. The fourth quarter was the 6th quarter in a row in which we won more than 1 million branded postpaid subscribers. On the following slide, we show some of the underlying T-Mobile performance metrics. In the fourth quarter, churn declined by 27 basis points, the biggest year-on-year decline of the whole year. While our bad debt expenses increased sequentially, this was mainly a reflection of our big factoring deal. While our recurrent bad debt expenses declined, we are confident that this metric will steadily improve during 2016. Our LTE network is now almost nationwide, and as Tim has already mentioned, we now have access to low-band spectrum covering almost 80% of the US market. This is great news for our customers, and it will allow us to profitably serve additional markets. We're also very pleased that we maintained our #1 slot in the J.D. Power Customer Care Award, indeed scoring the highest rating of any wireless carrier ever in that study. Now, on our European performance improved in 2015. Half of the Q4 EBITDA decline was explained by the rollover of the 2014 tax gain in the Netherlands. The bigger picture is that excluding the Netherlands, our European business would have been almost stable in 2015 due to some very strong performances, for instance, in Greece and in Austria, offsetting some weaknesses elsewhere. As the next chart shows, in Europe, we now have migrated almost half of our homes to IP. Our LTE coverage has increased by 24 percentage points to 71%. In Romania, we recently agreed a reciprocal deal with Orange, where we gain access to the market-leading LTE network in exchange for access to our high-speed fixed-line infrastructure. And in the Netherlands, we have leveraged our market-leading spectrum position to build an excellent LTE network, which now regularly comes top in speed tests. T-Systems posted revenue and EBITDA growth in the last quarter, but for the year as a whole, fell slightly short of our stated EBITDA target. But we were very happy to see that our market unit, which deals with the external customers, achieved revenue and EBITDA growth for the year as a whole. This benefited from a strong year-on-year growth with cloud products. We are confident that driven by the innovative offers, including our new cloud initiatives, our momentum will continue to improve. So now that's it, I think, for the operational part, and now let's have a look at the financials. On the back of our fourth quarter free cash flow of 1 billion, we achieved 4.5 billion free cash flow last year, ahead of our initial guidance. While this benefited from a positive settlement that also benefited our full year EBITDA, we also had offsetting negative one-off payments, so that the net cash flow benefit from settlements was almost zero. Adjusted for various one-offs, our ROCE improved from 4 to 4.5%. The main area here is the Scout in 2014 and 2015, the sales of shares within there. Our net income grew strongly due to adjusted EBITDA growth and a better financial result, partly offset by higher depreciation expenses. For the year as a whole, we achieved adjusted earnings per share of 90 cents, comfortably covering our growing dividend, which, as Tim has mentioned already, we have proposed 55 cents. The next slide shows our financial metrics. And as you can imagine, I'm pleased to say that at the end of the year, we are back within our target net debt to adjusted EBITDA range of 2 to 2.5 times, and our funding situation remains very comfortable. My final slide summarizes the strategy we presented to you at last year's Capital Market Days. As Tim has said, we believe we strongly executed towards these targets in 2015, and we are very confident that we will keep delivering against them looking forward. And now I hand back to Tim.
It's Hannes, actually. Thank you very much, Tim and Thomas. Now we can start with the Q&A part. And if you like to ask a question, please press star 1 on your touch-tone telephone. I will announce your name when it's your turn to ask a question. Should you require to cancel your question, please press the star 2. Alternatively, you can send us questions via webcast. Just type your question into the box below the stream. And please, would you kindly restrict yourselves to no more than 2 questions? Operator? We have is from Polo Tang from UBS.
Yeah, thanks for taking the question. I have 2 questions. The first one is really just about EBITDA growth in Germany. So from what I can see, Q4 15 was the first time that German EBITDA had grown in about 20 quarters. So can you maybe just talk about any specific one-off factors boosting EBITDA in Q4, or has Germany reached a turning point, and can we see improvement from here on? And the second question really just relates to your price rises in German mobile. So €5 increase for all new mobile subscribers. From what I can work out, that's a 10 to 15% price increase. So how quickly can we expect that to feed through the broader base? And then when you set your medium-term guidance of 1% growth in German mobile service revenues at your Capital Markets Day, did this factor in price rises? Thanks.
Yeah, hi, Paulo. This is Thomas. I'm going to start with the first one, and I think Tim will take then the second one. To be honest, first of all, I'm not aware about the last 20 quarters in a perfect way. But anyway, Q4 was very much, Q4 performance in the EBITDA was very much driven by indirect cost reduction. Basically, it's a matter of phasing. You've seen that the comp in Q3 was very strong last year, and it was relatively weak last year as well. So that is a matter of phasing more than a matter of principle question whether the business turns around or not. You know, what we've said is we're going to be stable, although we invest heavily into network rollout and transformation. I think that's the remarkable part, that there is stability in the EBITDA, knowing that we put more and more load into roll out the network infrastructure and do the IP transformation. And obviously that gives us room in the midterm perspective for upside. And I think I hand over to Tim on the second part.
Look, Bodo, we always have, criticized the environment in which we are working, that nobody's noticing that we are doubling our data volumes year over year in the network and not, being able to increase our revenues, and that we have to do something about. And the initiative which took for the German market with our new tariff scheme is exactly addressing this, as always mentioned. What we did is we offer, after talking to our customers and their pain points, we offer to these customers, 3 dimensions. The first one is we significantly increase their data volume. Secondly, we stop any data and voice and SMS roaming across Europe, including Switzerland, so he could use his data traffic while traveling. And thirdly, the 1 million hotspots which we have open to our customers so that he has easy data access. The philosophy behind that one is the following. Customers at Deutsche Telekom should not bother about data connectivity. They should feel free, and they should be, independent from the access point, should, get access to it. This is coming with a higher price. So the entry price is now 34.95, the midterm is 44.95, and the large package is 54.95. I think this is a very consequent offering, and is, by the way, if you would have followed the German press, highly appreciated. It was not criticized as a price increase, but it's definitely a price increase. Now, this is now a kind of initiative for our new customers to attract them with these offers. But what we said as well is every customer in our base could step up immediately as well. So there is no kind of allowance for the existing base to use the offering unless they are willing to step up on the revenue. So in our calculation, this is an increasing revenue move. And there is no, let's say, big backbook which we have in mind looking forward. The opposite is the case.
And maybe to add, the last part of your question was whether it's included in the 1% midterm guidance. Obviously it is, because that should also be a complete number. And I think that price movement, we expect that it will have a slightly positive increase, because remember that the speed of penetration depends on new customers and base customers moving into that plan. So that is driving then the speed of penetration here.
Thank you, Thomas. The next question is from John Dan from RBC. John? Okay. Maybe John, we can have the next question and go back to John in a moment. Okay. The next question is from Justin from Credit Suisse, please. Justin, can we have your question?
Yeah, hi. Hopefully you can hear me okay. A couple of questions, please. On the line loss trend, obviously Q4 line loss picked up again. And that, as you explained, coincided with a cutback in your discounts, which you've been offering on a regional basis. I was just wondering what your thoughts are about those discounts. It looks like United Internet actually cut their pricing on fibre at the same time. So do you see this price move that you've made as a permanent move, or rather sort of still dependent on what competitors do next? And secondly, on the new fibre build in these rural areas, the government's supported plan, could you give us a rough idea about the economics, in particular what you think the cost per home passed will be for the build once you've net of the government subsidy? Is it going to be similar to urban areas, or still, even after subsidy, a materially more expensive cost per home pass? Thank you.
So Justin, I'm going to start with the second question on the rural areas. I think with the supporting component in here, the economics should be close to those in those areas where no subsidy is available. Should not be substantially different. And I think our idea is that the phasing of CapEx, additional CapEx we will see related to that activity is 16, 17, 18. Obviously the timeline 16 and 18 with a lower number, like a low triple-digit number, and the peak obviously in 17. So that's the kind of phasing you should expect. And still we are, in terms of our 10% free cash flow growth, confident that we will get covered within that midterm perspective. So that was the second part. And Tim, would you like to have the first one?
Yeah, let me talk about the fiber build-out. Our strategy is following 3 dimensions. The first one of network, by the way, always follows first coverage, second bandwidth, thirdly latency. Let's say this should be, our agenda for the upcoming future. And that was, by the way, as well, part of the discussion. And the second statement which I like to give, they are not good and bad technologies. The only thing is they are good and bad speed rates in the infrastructure. And nobody should dictate us, which kind of technology is a good one and which kind of technology is a bad one, because we learn every day that there is something new coming from a technology perspective in our industry. Just to mention, let's say, the 14 gig, which we are now testing in the labs here for the last 50 meters on copper infrastructure, which will definitely, have an impact to the rollout plans in the future. Now, going into the fiber build in the rural areas, what we have said is, there is an investment coming from our side, and there are subsidies coming from the from governmental subsidies, both on Germany and from Brussels. And the economics of this one are following the pattern of the classical build-out. It's not that we are increasing our costs, knowing that the build-out is more expensive in this rural areas, but this is exactly the part which has to get compensated by the governmental subsidization here.
So I'm going to take the first part of the question, as Tim has answered also the second part, which was about the line loss. No problem at all. I think you're right. There was in some areas in fixed line, in broadband areas, competition heating up a little bit. But looking at the line losses, they're absolutely in line with what we have expected. We think we are doing good here. Looking into 2016. We expect an improvement here, so there is no worries from our point of view in that area.
Thank you, Thomas. Now the next question is from Roshan from Nomura. Roshan, can I have your question, please?
Afternoon. Just a very quick question from me. Given the continued progress of Magenta 1, could you just detail what type of upselling you are now achieving, given that has progressively increased over the last 2 or 3 quarters? Thank you.
This is Thomas again. I think the numbers from last Capital Market Days was a creative transaction, so measuring the revenue of a household before and after transaction was +4. That was a year ago. We are now talking about €7.20, so continuously seeing continuous improvements in the upselling area. Basically, the split between mobile and fixed and second SIM and first SIM and all that kind of stuff hasn't changed significantly. So that's the kind of classical split we've talked already several times through. What is really changing is the total number, which is moving up now to 7.2 after end of transaction plus.
Thank you, Thomas. And let me just try John again. John, can you have another go, please? John from RBC. It doesn't seem to work, but he has actually been wise enough to send me his questions per email as well. So we are covered. And he asked the following question, whether in the US we are changing now from being a kingmaker to being a crown jewel of the Deutsche Telekom portfolio. And his second question is whether in fact, he sent me 3, so I have a choice. The second question is how we are looking at the convergence solution for our convergence situation in Austria, Poland, and the Czech Republic.
It's always good if a king has crown jewels. So that said, by the way, John is King Cool. So that said, I think the US had a fantastic year, and just coming back from the US, our team is quite optimistic for 2016 as well. This asset is in great shape. Main metrics like churn, ARPU, everything is trending in the right direction. And I think what has been a little bit maybe underestimated from the market so far is the success the team had on acquiring the A-block spectrum before the auction, covering already 80% of the market with low-band spectrum. I think this is really a great opportunity, commercial opportunity for us in the rural areas and for the deep indoor coverage. Now, we remain open to a transaction which could maximize the value of this opportunity for our shareholders. This is not changing this philosophy, but there's nothing, which is driving us into a hurry here. Nothing which is forcing us into a hurry here. We are anyhow now in the phase of the incentive auction, and during this process there are no possibilities talking among the competitors here. So I think great momentum with our kingmaker in the US, and strategy getting executed throughout 2016.
Yeah, and on the second question, a few remarks here. I think first of all, we need to distinguish between Poland, Czech on one hand side, and Austria and the Netherlands you mentioned on the other hand side, yes. Because we acquired GTS, as you know. So on B2B, we are already in a solid converged situation. And looking at Poland, we also noticed that it's not that kind of strong fixed mobile converged country like, for instance, the Netherlands is. So we need to distinguish here between complementing a story like Poland and Czech Republic related to FMC versus Austria and Netherlands, where it's clearly a mobile-only game we play in here. Austria, I think, looking at the market, there is not such a strong movement towards FMC. The Netherlands obviously is. So basically, first of all, starting with that remarks, we need to distinguish the situation in those categories. I think in Austria, we as in other countries as well, where we're lagging the B2C fixed line part, we're trying to use wholesale agreements in the first instance. Let's see where we end up here. And the same holds true, I think, for Netherlands. I think that's the perspective on FMC in those 4 countries.
Thank you, Thomas. And let me now move on to Simon Whedon from Citi. Simon?
Yes, thank you very much. Couple of questions, please. First is on guidance and CapEx. And can you confirm that the broadband subsidy scheme guidance is technically in addition to the CapEx indications you gave at the last CMD, but you haven't changed the free cash flow growth guidance? And could you discuss whether there might be any risk to that if you were to step up on the broadband subsidy scheme next year, say, or in 2018? And the second question is on GFast. If you could go back to the topic of architecture and technology, particularly given your comments about sharing technology information or cooperating with BT on that, whether GFast has made you, or the availability of GFast has made you think again about what the right architecture is for the rest of the network deployment, or whether it's something you might come back to or something you're deploying anyway.
Simon, I'm going to start with the first part with the guidance and the CapEx. I think it's quite simple. 2015 was 10.8. In 2016, you should expect an 11.2. What you also should expect is, as we said, is that we stick to our midterm perspective on the 10% free cash flow growth. And the guidance on the free cash flow for 16 is 4.9. So I guess that should hopefully answer the first part of the question. And Now, Tim, you.
Second part of the question is, look, we learn on technology every day something new here, and definitely we are in contact with our friends from BT on the subject. Our engineers are working very close with them. G.fast is a very interesting technology which we are looking at, and nothing has been changed in our rollout strategy so far. You know, the question is whether vectoring could be substituted by G.fast immediately. This is a commercial discussion, but and a bandwidth discussion which we have, but it is too early to say that we will consider this. And I expect a better economics than rather a worse economics on any changes in this regard. So let us work on this infrastructures here and speed up the infrastructure. Our intention is now to cover most of the country in Germany with vectoring. You have seen these huge numbers, 4.4 million customers covered, you know, with fiber last year. Another 531,000 customers only in the fourth quarter, you know, using our new technology. This is a record number, and higher than all the, let's say, the previous quarter. So we are on a clear growth track here by catching up, and we want to offer that to the population in Germany, and not only to an exclusive set of people, some technology. The moment we have built this, that moment, we will then consider, you know, vectoring plus G.fast and even fiber rollout maybe to the buildings here. But this is something which is coming then as a next step. And with the vectoring discussion and the decision which has been taken, we have gained additional momentum on this. So we are in good shape rolling out this country and convincing customers on this bandwidth.
Simon, also just to explain or give an answer to your question whether the specifically the broadband rollout plan might challenge our cash flow guidance. We expect the peak of that to be in 2017. So our guidance is midterm to 2018. So therefore, it will not really materially impact, we expect from today's vantage point, the 2018 financial figures. And the other quick point is that, of course, when you evaluate our investments, you should also keep in mind that we have a very granular street cabinet network. So we have a lot of fiber in the streets, very close to the customers. In fact, we have just over 100 customers per street cabinet. So that's a very dense fiber infrastructure that we already have. And with that, the next question is from Mandeep at Redburn. Mandeep, can we have your question, please?
Hi, sorry, is that Mandeep at Redburn you're asking?
Do you want to ask your question?
Sure, yes, thank you for taking the question. I have a question on one on the balance sheet, please. You know, with new IFRS rules coming in with leasing being brought onto the balance sheet, where do you think, what sort of implications does that have for your leverage? And particularly with US spectrum, where do you sort of see the balance sheet constraints? That would be the first question. The second question is just coming back to your guidance excluding the US. It's been pretty stable at around 13.3 billion of EBITDA in 2014, 2015. Now you're sort of saying 13 billion excluding the US. Could you just give us a little bit more color on the moving parts there, please? Thank you.
Okay, I'm going to start with the balance sheet. First of all, you know, I like transparency and I like reliability. So talking about the new rules kicking in 2019, I don't feel there is any negative about that. All the information are already disclosed. If you talk with the rating agencies, that's their perspective already. So I don't think there is any kind of surprise or something the market is not already knowing or anticipating. That is, I think, on the balance sheet side. On the guidance, I think the key question is on the 13, if you do the math on the 21.2 billion of EBITDA and you strip out the US, you will end up with a 13.0 on the non-US operations. And I think that's a good number. It's a solid number because in 2015 we've seen the same number. If you strip out the Liberty effect, you strip out the effect obviously of selling EE, and there is some related money, an EBITDA effect on the brand fee and the management fee part, and the same was true on the sales of T-Online. So basically that's a kind of technical result of stripping those one-offs out.
Okay, the next question is from Dominic from HSBC. Dominic, can we have your question, please?
Thank you. Firstly, on cross-border synergies, you've completed the all IP migration now in 3 countries, and you said you've opened the first centralized operation center. So do you see more or less synergies than, say, 2 years ago, or when you initially planned the project? Where are you versus your own plans? And then a second question on German fixed. Liberty continues to talk about new build plans, and then Deutsche Glasfaser seems to gain traction as well. Is that sort of a race to build part of your motivation for more rural build? How serious do you take those alternative infrastructure builds, or is it really plainly the public subsidies that made you commit to the incremental build? Thank you.
Yeah, I'm going to start on the cross-border question, Dominic. First of all, let me differentiate again between the all IP migration and our pan-European virtualization effort. You know what we've talked you through last year on the Capital Market Days was what we call superior production model, and it is about digitalization of the customer-facing processes, the virtualization of the infrastructure, the pan-European infrastructure, and all IP. So it was always the combination of those 4 we will bring into the market. And we said at that moment in time, on a stable run rate, we will see 1.2 billion of savings related to that. Remember, 700 was allocated to Germany, 500 was Europe, and from those 500 in Europe, 30% roughly, that was our estimation, is cross-border related, and 70 is in-country related. And there is no real news behind or no real news after we've made some experiences now on completing all IP, but not completing the complete production model, so to say.
The question on the Deutsche Glasfaser and on Liberty, by the way, in 2/3 of the country, cable operators are already offering their services, and I think we could be very proud, and it shows the strength of our brand, it shows the strength of our proposition. If you look to the numbers which we have gained in 2015 and which we're expecting going forward in 2016 with regard to, let's say, our position here and our net add development. Do I expect, that this is a new infrastructure-based competition? By the way, I welcome every infrastructure competition here in Germany. This is overdue, and due to a wrong incentivization on the wholesale access regulation, we haven't seen sufficient infrastructure-based competition. So if these guys are coming and in certain areas they might build infrastructure, we will consider even whole buy as an alternative on their infrastructure, which might then help these smaller players to leverage their asset base. So I clearly think this is the right thing. What I think is wrong is that we are forced to open up all our infrastructure immediately that it's got built, and that people are benefiting from it without investing into an own infrastructure. They realize return on capital employed, which are beyond 40%, and they do not, the regulation is not giving an incentive for necessary capital investments here. And this is something where I'm fighting on in Germany. That is something where I'm strongly fighting on in Brussels. I was very clear to Oettinger and to Ansip, meeting them in Barcelona. We need a new kind of network access regulation, and I hope that it's now time for more deregulation in the entire European landscape. And I hope that this will be considered in the digital single market package, which is due in the third quarter this year in Brussels.
Thank you, Tim. The next question is from Guy Petty from Macquarie.
Yeah, hello, team. Just a very quick question on your CapEx guidance. You talk about a higher number or a bigger number in 2016. Can you talk about where that incremental spend is going from a technology perspective and also from a geography perspective? And also, is there any particular change in what you're investing in with regard to, for example, your capacity rollouts in Germany? Is there anything that you're advancing and slowing down? I'm just trying to get a work out on the shift changes in the total CapEx spend. Thank you.
Yeah, first of all, the increase of 400 from 10.8 to 11.2, you see, is 50-50 Germany and Europe. In Europe, it's not one country. It is basically following the logic where we see customer demand and a good return on investments, and an opportunity to utilize the network fast and return the money, get a good return on the investments. And in Germany, basically, it is related to what we mentioned. Part of that is related to, in 2016 already, to the subsidized areas. We're gonna put some additional money on there, and go for higher coverage targets, as Tim has mentioned already.
Yeah, so no shift in strategy, but of course, good investment opportunities which we take advantage of, and now is the time to go for it. And maybe we have a next question from Emmett, please. Emmett, can we have your question?
Yes, absolutely. Thanks very much, Hannes. Just one question, please. I know it's maybe a bit tricky to comment as it is an auction, but could you maybe just give us a few nuggets of insight into how you're thinking about the forthcoming auction of German Bundesliga football rights, please? Thank you.
Currently, the conditions of the tender as defined and proposed by the German Football League Association, and they get examined, is that the right word? Yes, by the Bundeskartellamt, so the Federal Cartel Office is looking into that one. So therefore, it is not finally clear whether there is one bidder who is able to acquire all the content rights, how the terms are with regard to a no single buyer rule. This is the model which was being taken in the UK, and that is something what the DFL even have in mind here. German soccer is important to me. It is important to Hannes. And by the way, we have the same club which we have in mind here. But German soccer is a very, very important content right here, as you could imagine, and it is even relevant for the TV platform. So we will follow the tender very closely. We are open-minded towards the auction here, as we have shown in the past. And we will act accordingly to our business case logic. So let's see how that is. Independent from that one, I think it is possible to say that we have signed a contract with Sky already. So if nothing is changing in the landscape, we will be able to offer the service even in the future the way as we do it today. By the way, this was already approved by the cartel offices.
And we also already, as you may have seen, have the rights to the German Basketball League and the German Ice Hockey League. So we, as you can see, we are not dogmatic on this issue, but I think we also fully appreciate that each market is very different, and surely the German market is very different from the UK market, as you all understand. So the next question I will take from Fred Boulon at Bank of America Merrill Lynch, please.
Hi, good afternoon, everyone. Thanks for taking the question. Firstly, on the US, if you could come back on the rationale of the self-funding strategy, considering its increasing drag on your cash flow. Your German bonds are currently trading at very low yields, so why not raise a bit more funding in bond and lend to the US? And secondly, if you could come back on the factoring activity you've done this year versus 2014, and if we should expect less of that going forward, now that Japan demand will probably replace some of the EIP growth. And maybe just a clarification, if I may, on your pricing in Germany. I understood that your existing Magenta Mobile customers would get higher data without price increases, but they would not get EU roaming and hotspots. So for them, actually, no price increase. Can you just clarify that for us? Thank you.
Yeah, Fred, this is Thomas. I'm just going to start on the self-funding question. I think it's a very good question that is raised regularly, and I think based on that, the very good development we see in the business and the positive free cash flows we're seeing right now, it's a question which is relevant, and it's right to raise that question. I think what we're going to do is review again, as we continuously do, in that specific element, and we'll come back to you.
Fred, maybe you can just repeat your second question. Sorry.
Yeah, so the second question was on the factoring activity in the US, how much you've done in 15 versus the year before, and so to what degree that helped your free cash flow?
Yeah, the EIP or EIP securitization in Q4 was roughly $800 million US dollar. It has remember that there is still due to the growth in the US and the EIP situation we have in there, that there is still a slight negative net effect, taking the drag we have in from that growth on working capital. Including the factoring, there's still a slight negative effect on the free cash flow on the working capital in 15.
We had in 2015 in total a net factoring effect of 900 million, in the previous year of 600 million. And as Thomas has said, the net factoring was smaller than the incremental build-up of EIP receivables and equivalent jump receivables on our balance sheet. And so the next question from Akhil at JP Morgan, please.
Yeah, hi, good afternoon. Just two questions, please. Firstly, on the question from the beginning on the German price changes. I just wanted to clarify, when we think about the changes that you've made, like for like, do you think that fully mitigates the offset that you'll have from out-of-bundle dilution from roaming now being effectively captured in bundle? And when we think about it more generally, to what extent have you accommodated these sorts of changes across the rest of your European markets in terms of bundling roaming within the tariff? And then the second question is just a big picture question around tower sales. We've obviously seen some of the more levered stocks across the sector starting to sell towers. It's not become a bigger theme so far across the other stocks, and Vodafone has talked quite dismissively about it. But I'm just interested to get your take on the subject and how you think about it. Thanks a lot.
Yeah, I think on the German price changes, Tim elaborated already the logic behind, and the commercial answer on the question is we expect that being slightly accretive. That is number one question. Number two, on the tower sales, I think, it's something we are investigating. It is obvious and very clear that we have a very strong position here. We have something like 40,000 cell sites in our European properties. Looking in the German environment, you see 500 million EBITDA number on the towers. So that's an obviously an interesting area, and it's a kind of element in the cookie jar we have, and we are investigating about.
Thank you, Thomas. Next question from Ulrich, please. Ulrich.
The first one is, you mentioned sort of some price competition in the broadband arena. And of course, you're setting that with a very strong shift towards VDSL, which is progressing at a rapid rate. But in the bigger picture, do you consider a further loss of retail share in German broadband acceptable as long as it is just to wholesalers and as long as you get the mix shift from ADSL towards VDSL in your retail base? Or do you think there is a sort of a magic hurdle where you would sort of really decide that too much is too much and you need to maintain that sort of retail share, if only from a scale perspective? My second question is, in the annual reports, nowadays you're sort of giving 2-year outlooks, and in the 15 annual report, you're now talking about decreasing revenues in Germany for 2016, and then the year before you talked for 2016 about stable revenues. Is this simply the annualization of the higher device sales that helped you on revenues in Germany in 2015, or is there a weakening of the revenue trend that sort of explains this change in the 2016 revenue guidance for Germany? Thank you.
So we're going to start on the first part, Ulrich, on the price competition. First of all, please have a look at the fiber net adds we see in 530,000. And the split, I think it's a kind of fair split and mix you will see from retail versus the wholesale part. So that's number one. Number two is we are not up for shares, we are up for growing the revenue. But one thing is for clear as well. If you're continuously weak on your net adds, you will also lose the revenue line. So, it's not like we are up for shares, we are up for revenue growth, but obviously continuously taking the market attractiveness into account. And we've been the ones who moved 3 times last year, promotions, pulled promotions out, regional ones, the CPEs for free, etc. And one thing is for clear as well: if competition is staying aggressively, we will also bring some promotions back. That's for sure. Without the customer numbers, we will not make it. But again, have a look at the fiber numbers. 530,000 is a clear message, and the majority is more than 60% is on the retail side. On the German revenues, yes, it's important to take into account that we expect to change the model on the mobile handsets we're selling there. So on a like-for-like basis, looking at the valuable revenues, we're talking indeed not about a decline but a stabilization, which was not promised last year. So yeah, I think that's clear.
Okay, thank you, Thomas. So we'll take a couple more questions. So we next have Paul from Bernberg. Paul, can we have your question, please?
Yeah, it's about the relationship with BT. I guess there's a lot of doubt out there about the merits of cross-border combinations or cooperation. So I just wanted to ask your thoughts on what might be the primary sources of benefit or upside or synergy, whatever you want to call it, from your relationship with BT. So specifically, does it make sense to cooperate or combine T-Systems with global services? Does it make sense, and is it possible to bring BT into the procurement joint venture? Could BT benefit from your all-IP deployments or being brought into the PAN-net? And then finally, is there any benefit for Deutsche Telekom from BT's success in premium sports content distribution?
Yes. So the answer is we are happy shareholders of BT. Now we want to see the merits of the integration of BT with the EE merger. So this is coming along and we are sitting on the table. Next week I have my first board meeting, so let's say, get used to the UK governance and the UK politics here. Second is, yes, we will invite BT to the procurement alliance. Yes, we will consider working with them on the innovation and the technology field. Yes, we are considering working together in the technical field on cloud services and the like. And yes, and this is the unique situation with BT. There is a huge value when it comes to the B2B area, the global positioning, especially when it comes to the local loops or the fixed line piece of it. So this is something we have to look on. It's too early to say what we could do there, but definitely Gavin, myself, Thomas, Tony, we are discussing how this could look like and how that could be organized, but it's too early to call victory here. We are just started on the conceptual part.
Thank you, Tim. So next question we take from Robert at Deutsche Bank.
Yeah, thanks very much. I think your jewel in the US now isn't expecting to pay any tax in 2018 and even beyond that. How relevant, how important is that for your 2018 free cash flow number? Basically, what did you have baked in and what would be the CAGR without any US cash tax in 2018? And just finishing off on BT in the UK, I assume that Brexit, if it happened, would make virtually no difference to your thinking about future cooperation and work with BT or holding the asset longer term.
Robert, Hannes here. Just to state on the first question, our free cash flow guidance, when it was given, and as we reiterated today, it does not assume any sort of specific changes in tax regimes in any country. So, you know, to the extent that we have a benefit from the bonus depreciation in the United States, and T-Mobile has talked about this in the conference call. This would be an added bonus in 2018 and beyond. But at this point in time, it's important to say that as we reiterate our medium-term guidance today, that is not predicated on this, but it's an underlying and like-for-like reiteration. Okay, so just on the next question, Tim, Thomas?
Look, the BT, the Brexit is something, you know, look, we are very experienced with countries, you know, within the European Union, without the European Union, across, let's say, the Atlantic, including European currency, outside European currency. So we are a global company with 70 billion turnover, so nothing to worry. I hope that United Kingdom stays in the European community here and is not swimming away. So that said, this is not changing our consideration in a global market Deutsche Telekom is operating.
Okay, thank you, Tim. I think we take two more questions, and the first one it would be from Mathieu at Barclays.
Yes, good afternoon. Thank you very much. First, just coming back to the cost-cutting comment that you made earlier in the call. I mean, if I look at 2015 numbers and adjust for handsets, it does seem that clearly in Germany there was some decent cost-cutting throughout the year of around 150 million, and I would just want to confirm that that was kind of the run rate for 2016. And then a question about the corporate market versus the consumer market. Obviously, there's a big premium when I look at the data you release between mobile ARPU in the corporate side versus the consumer side. You've just increased prices in the consumer, so maybe that reduces a bit. But more conceptually, do you think that premium of corporate over consumer is sustainable? Thank you very much.
Maybe I'm going to start with the cost development, last year in Feb, we announced that from 14 to 18, we will achieve 1.8 billion indirect cost reduction, which is on average a 450 kind of number. Basically, what you have seen last year is a 400 million number, so it's bang in line with what we have intended there and what we've laid out as a direction. So that was on the cost cutting, and then the corporate market. I'm not sure whether I got the question right, to be honest.
Look, the question was whether we expect that the ARPU on the B2B side is being stable, or whether there's a certain risk that we might lose this premium which we have achieved in this area. Let me state one thing. If you look to the German economy, we have gained some really big deals throughout 2015 from corporate customers, and they are, by the way, not coming back because of the price. They're simply coming back because they were disappointed with the quality of the service of our competitors, and especially when it comes to coverage and when it comes to bandwidth. On top of that, the IT capabilities which we have, including our secure cloud service for Germany as an integrated offer, is something which customers find quite attractive. I do not see that this is a kind of risk on the ARPU. I see the upside for new kind of growth areas which are coming with this development.
And Mathieu, this is Thomas. Maybe there is one confusion in there. The B2C numbers do include wholesale, first brand, second brand. If you do the like-for-like math, the delta between the B2B customers and the consumer customers is below 5%. So that's not the big number. It is basically the number you're comparing is a mixture of various segments. You should not really compare, I guess. So there's not that big difference between a Telekom branded consumer customer and a business customer in terms of the ARPU.
Thanks, Thomas, for the clarification. And I think the last question will be from Andrew at Goldman. Andrew, please.
Yeah, thank you. Good afternoon, everyone. I had a couple of questions. Firstly, on your fixed investment opportunity, could you just give us an insight into your view on the latent demand for ultra-fast broadband across your customer base? Is there that latent demand today? And if so, why not roll out V+ or G-Fast when you're rolling fibre to the cabinet, given it will save on the costly engineer visits? And then just a second point, to your point that you made on wholesale infrastructure regulation having been poor, just a question on layer 2 regulation. When do you expect an announcement from the regulator on this new regulation? And what assumptions do you make on the impact of it on your wholesale business? Thank you.
Yeah, I'm going to start with the first question on the fixed investment opportunity. I think the demand for fast broadband is quite, I think that's quite obvious if you look at the fiber numbers we're disclosing. As we mentioned, more than 500,000 last quarter. So demand is enormous, and the customers do like it, although they, and that's clear, it's important to understand, we're talking about areas where customers obviously have the choice between a cable infrastructure and our infrastructure. So we see there is demand, we see people like our product, and they're coming to us. Why not? And I think what we do is we stick to what we have said. We said we will cover 2/3 of the country by the end of the year with vectoring. We will then move forward to 80+. We will introduce super vectoring the next year, and so on. So that is our line. And what we also said is we're not religious about technology discussions. We think there is no wrong or right technology. We think what you need to do is you need to have a look at the economics in the various areas, and sometimes you will, in a mid or long-term perspective, find FTTH. Sometimes you will find FTTB, you will find G.fast, and you will also find 5G. So the economics are the most important elements here, what are customers willing to pay for, and what the competitive situation is. And depending on that, we will choose technology. And meanwhile, as I said, we will deliver what we have announced end of 2016, 2/3 of the country covered by vectoring, and then move to super vectoring.
Andrew, the question on the layer 2 regulation, from a timing perspective, the a preliminary decision by the Bundesnetzagentur is expected end of April. After that, the national consultation rounds and the notification by the European Commission take place, and a decision should be final when it comes to the product launch of Bitstream Layer 2, 1st July 2016. So that is, let's say, the timeline. With regard to the implication, I do not see a big implication on that one. Due to the fact that almost all the volumes are in the contingent model, and where the reduction is very, very small, less than €1 here around that one on the VDSL 50, for instance. So I do not see a big impact on that one coming through the P&L.
Thank you, Tim. And this now takes us to the end of our Q&A session. As you know, you have the opportunity to contact us directly for any further questions or follow-ups at the Investor Relations Department. And I would now hand over back to the operator, and rather I hand over back to Tim, because I think he might want to say a few, give me a few closing remarks. Thank you, Tim.
Yeah, look, here's the operator. Guys, the issue is, I think 2015 was a very good year for Deutsche Telekom. I think this digitalization is let's say, heavy hammering on every piece of the business here. And what we think is very important for investors is the first one, being predictable and reliable on the one side, but at the same time being very dynamic in its way going forward. And I think if you see what innovations we have brought forward, the dynamic piece is there. There are a lot of, let's say, growth momentum on the growth areas, and we were able to deliver on almost, on all parameters as mentioned before. One of my Stanford professors, he said, don't be market-driven, drive the market. And by the way, I think this should be our aspiration. And our aspiration is to differentiate with our brand, with our propositions. And the differentiation is mainly about two topics. One is about network, and the second is about the customer experience. So this should, let's say, the focus points of management here within the groups. And if you would ask me, tangible, what are the tangible measures you're working on? What is, let's say, happening in 2016? What is on top of your agenda, Tim? My answer would be first, drive relevant growth innovations, as we have probably shown impressively at the Mobile World Congress. That has to go on. There is a TV platform coming. There are new cloud offerings coming. There are new security products coming at the CeBIT. So this is the one piece. The second one is, for me, make seamless connectivity a customer experience. I think the pan-IP has to become real, and we have to prove, let's say, the benefit of that throughout 2016, step by step. The monetization of our invested infrastructure is at our main topics, and to reiterate what Thomas said earlier, retail is from utmost important in this one. We are not a Bitstream Access doing wholesale. This is an additional business. Our focal point is retail and the Magenta 1 proposition. The third one is a service attempt. I think we are good on the differentiation with regards to products. We are good on the differentiation with regards to innovation and in network. I think where we could do better, especially in the German environment, is in the service area. So I will start a new service attempt for the German operation that we even leapfrog the experience in this area. So this is the third area I'm focusing on. The fourth one is the cost transformation and the reduction of a labor force within the organization. We have to transform the skill set in this organization according to digitalization, and we will not stop here. So this is on a fourth topic on my topic. On the portfolio side, my main area is mobile only in the Netherlands. We have a good network here. We have a great spectrum position. We have an established brand, but I think we are not satisfied with the overall market performance here, despite the fact that over the last 6 months we have seen an encouraging trends on net adds, but this is not sufficient. So we will consider intelligent measures to improve our position and to utilize the infrastructure. And my sixth last point, which I hear of my lender, is definitely continuing the value enhancing story in the US. With this further growth has been laid out by the team and being very focused and concentrated on the spectrum auction, which is in front of us. Overall, I think improving the governance and to overcome structural hurdles, to gain speed and to reduce the complexity in the group is something we are discussing here internally in big projects. This is something which we want to share then with you throughout the year. So you see the plate is full. We stay committed and we won't stop. Thank you very much, guys. Bye-bye.
Okay, thanks again. And now I give back from the operator to the operator. And again, any further follow-up questions, please pass on to the Investor Relations Department. Have a good day and goodbye.
We'd like to thank you for participating at this conference. The recording of this conference will be available for the next 7 days by dialing +49 1805 204 7088 via reference number 478946 # or #. We are looking forward to hear from you again. Goodbye.